Hey, what's going on YouTube? It's Trader Cam, and today I wanted to make a video going over my personal model. The concepts come from ICT's One Setup for Life. I've just taken some time back testing and going through coming up with my own set of rules for my entry, my targeting, and the time frames that I kind of look at. This is a model that I personally use. It's my number one go-to. Doesn't require bias. You don't need to go on any higher time frame charts. You can literally just stick to the 1 minute. That's not clickbait. Just finish watching the video and you'll see for yourself what I mean. And I recently used this to get funded through Apex, and I've been using it since, and just been seeing great results with it. So I had a few requests on how to actually trade this setup, and so I figured might as well make a video with some examples in it. Okay, now let's go into the chart and I'll go over the rules and we'll go over some examples. The first thing I want to talk about is the times to know. This came from ICT's One Setup for Life video. I believe it was a live session that he did where he talked about the liquidity resting in the market above and below these sessions. So London between 2 and 5 a.m. All these are New York Eastern time. AM session is between 9:30 a.m. and noon, 12 p.m. Lunch session is 12 p.m. to 1:30 p.m. and then the PM session finishing the day is 1:30 p.m. to 4 p.m. So the model for the ES is at 9:30 we are looking for price to trade below session liquidity, London or the previous day. So depending on how far off we are from London or the previous day PM session, we could already be way below those, and then maybe there's a previous AM session in the way. So sometimes you will note that the AM session could be a draw if these are already taken and price hasn't given you any kind of market structure shift and it's still heading down. So these are all good liquidity pools to watch out for. But for this model, we're waiting until 9:30 a.m. and we're going to be looking at the high and low of London and the high and low of the PM session, as well as the open and close. And then once we've taken either side, buy side or sell side, we're going to identify a proper market structure shift. So I'll go over the example for that. And then once we find the market structure shift, we're going to look for a buy side imbalance, sell side inefficiency above our market structure shift to tell us to go long. So this is a long scenario that I have these rules written out for. And we want to mark up 50% of the displacement that causes the shift and look to go long there, targeting the opposing liquidity of the session or the open and close. And also if a new session starts, then we want to look to take profit at the high and low of the previous session. I'll get into that as well. And if the target isn't hit by 4 p.m., we're going to close the trade manually. And to tell which one to trade, whether it's the ES or the NASDAQ, we want to look for S&T divergence between the NASDAQ and the ES before entering. So these rules that I'm about to go over in this video just apply for the ES. This model and the idea does work on that NASDAQ. However, I just have a different method of entering. Rather than using the 1 minute chart, I use the 2 minute chart, and essentially it's the same. Okay, so now we go down, look at on a 15-minute chart. I just use this to mark out the highs and lows. So we got the PM session, which is 1:30 to 4 p.m. I'm marking the low for that, PM session low, and then the low and high of the London session. So right now we're sweeping below it. It's before 9:30. So if we were going to go long here, obviously the open is not enough to form a trade idea off of, but I'm marking out the close as well, because the open and close of these sessions is also very important to pay attention to when it comes to trading this model. Okay, so now I'm gonna jump into the lower time frames down to the 1 minute, and we are going to watch what happens at 9:30. So it might take a minute for the sessions to load up, but we already have them marked out, so it doesn't matter. So right now, going into 9:30, we don't have any market structure shift. But to explain it, we're looking at the lowest down close, which would be this candle right here. because it closes lower than any other candle that you see within this fractal. So I would look for a swing high above these two candles to be broken. It could be the swing high made before it or a swing high made after. As long as there's a swing high above these two candles. And the fact that there's green candles up close right there separates these as the order block I'm paying attention to at the current moment in price, but it could change. But first we need to get to 930. So now we're at 930 and we're looking, and I'm going to draw out a line to watch. Right now we're going to watch for a market structure shift. Until we get one, I'm not interested in going long. Could go lower. So we got a candle here, but it's the same closure here, so I can keep watching this one. Okay, and we've gone down further, but it's just still the same close. So what I'm looking at here, even though we have displacement and pushes up and bissies, I'm looking for a buy side imbalance to be put in above here. So now you can see we actually have one, and this helps keep you out of all this chop and the mess. Obviously we wanted to come back down and take more lows again before going long. So you can see we shifted above a high here and made a buy side imbalance, but it's not above the actual high we're watching. So we have higher highs here, but I'm paying attention to the lowest down close candles, which is these two. These ones are all equal to that one, so I'm still going to keep with this idea. And we finally have an imbalance put in place that's above, even if it's just one tick above this market structure shift, this line that I have out, it'd be valid. So now that we have that, I'm marking the range, and we have this 50% right here. So I'm going to put in an order now right there at the 50%. You can use the high of this, or you can look for order blocks or anything else that you might prefer to take an entry off of. But this BISI being put in above the market structure shift is the one and only thing that actually will classify this as an accurate entry. Put my stop below the low, and for targeting, you could target London close, which still gives you great trade, and depending on how many you go in the market with, if you went in with some extra positions, you could leave a runner for London high. More often than not, it'll go to the highs, but if you're trying to get greedy and take a full pull and it doesn't hit that, more often than not, you'll notice that it would have went to the close at least. So either way, we have two huge trades being put in. I'm just going to play this out. Okay, I'm going to pause it right here real quick. So you can see we came down, tapped us in for an entry, came just below the 50% of this displacement leg. This displacement leg that actually created the true market structure shift. And we tapped into it, 955. Didn't spend too much time there, didn't get too much drawdown, and then we took off. And by 10:34, we actually took the close, and by 10:55, we actually took the high. So there's an example of this trade playing out for an AM session. And then all you would do now is wait. This is a good enough trade that you could walk away for the day, or you would want to then wait for another session. So once this one ends at lunch, you would apply the same concept. Sorry, when I say lunch, I mean noon. So from 12 p.m. Eastern to 1:30 p.m. That is one session, and same with the afternoon session. So just like we had it on, we had our rules somewhere. Oh, right here. So we have our rules right here, and you would just mark out these sessions. And once the next session happens, which would be lunch, you could look for a high or low swept of the AM session and take a trade. And then once the PM session, same thing, look for the high and low of the lunch in the AM session. So you're pretty much just always looking behind you, what happened, what kind of liquidity is resting at those sessions. And then remember the session starts. If a new session started and our high of the AM was down here, not quite to the London high, once we hit lunch session, once we take the high of AM, we'd want to get out there because it's a new session. So the same ideas apply. We could take just that session without going to the actual target you might have had from the session. So if you're in a long trade that goes to the next session, you might have to readjust your targets based on the same concepts. So just because you got in a trade and it's taking long doesn't mean the concepts go out the window. You want to keep applying the same concepts into each and every session and pay attention to the closes and the opens of those sessions, as well as the high and lows. Okay, I wanted to show another example. This one is our most recent trading day that we've had. It's Friday, the 18th of August. And here's an example of, we don't have to necessarily be that close to liquidity at 9:30. So we want to wait till 9:30. If we swept under this and came back in it, and at 9:30 we were in the liquidity, we don't have a trade, even though we did all this, let's say, overnight. So what's key is to wait until 9:30. But in this example, we are quite a bit under it at 9:30. So the next bar would make 9:30. And because we don't have anything else, if we look back, our PM session is also way up here. So to me, at 9:30, once we open and we're below that, that's sweeping the liquidity. So the same concepts still apply. So if we jump down into the 1-minute chart, right now we can see the lowest. So I'm not paying attention to these in a market structure shift there, because even though these are the lowest, this is all pre 9:30. So I want to see what's going to happen at 9:30. So I'm more of watching these ones right now, and mark that high out. So now we're at 9:30. This low is actually now lower than those lows. So this qualifies this as the order block that we're watching. And so these are dojis. So these 3-4 candles right here, these 4 down close, is the order block I'm watching. So I just need a high anywhere above this line. So if we put in another high like right here and it's lower than that one, you can go off that high. But right now this is the high we got, so that's what I'm watching. And 9:30, we're open now, and we're definitely below sell side, so we have what we need to go long. And there is a BISI, but it's just under, not even one tick of it is above this line, so I'm not paying attention yet. Boom, now we got a BISI that's above our market structure shift right there. But that's a pretty high entry considering what we've already done. So like always, you want to, if you want to refine your entry, this BISI being above the market structure shift is all we're looking for to tell us to go long. That doesn't mean we have to necessarily get in there. You could look at, let's say if you're an order block trader, you could look at, let's say, this order block. It's not quite at 50%, but it's close enough. So it just depends on your trading style, but you need to have some kind of inefficiency above your market structure shift, above the high that creates the market structure shift, to be a true shift in structure. So I'm going to go long here, and Put our stop there. And depending on how low you are, you could target the low instead of the high as liquidity, because as ICT teaches, whatever might be a draw on the downside could always become a draw back to the upside, or vice versa. So we could target the low, or we can go as high as London high. So let's say we're doing the low, that's still 2.22 R, and it's over 17 points. So depending on your style, you could take two, or you could trail up and try to get to the high. It just depends on what you like. I personally like to go for the high and low over, let's say, open and closes. But when it comes to being this far away, I would say targeting the low is the safe bet. You'll go to the low, and then you can leave a runner on for the high. So let's play this out. Okay, so 11:01 we hit our first target, which was London low, and then we still haven't hit London high yet. But this is a good example of new session, new liquidity. So we have equal highs now between lunch and New York. We didn't take New York though, so I would be targeting now, if I was in this trade, I would move this and retarget back to the AM session high. Could still hit that high, but if you're following the rules to this plan, once we're in a new session, we didn't hit our target, we would look at the previous session as our new liquidity, because we could just sweep the high of New York, which in this case is relatively equal highs, and then break down without actually going to London's high. But I'm going to go up to a higher time frame just to see for the sake of this video, and we hit it right at 3:45. So before the 4 p.m. closure, you would have gotten your target, if you're still holding for that. But then these highs were hit 2:30. This is the one setup for life, essentially. This is just what I use to get in it and get out, and things I've noticed by incorporating the opens and closes and watching out for displacement and true market structure shifts. But you can see when we came down, perfect to the EQ, and then it was a big chop fest Friday, but we ended up going up. And you can use other things for targeting. Me personally, on this trade, I was looking for TGIF, so that helps. That puts us around here. You can use other things to confluence with this idea, but one thing I will say about it is, if this is what you're using for your trades, then I wouldn't be worried about the imbalances and stuff in your way. I would just focus on liquidity and the open and closes. I'll hold through all these imbalances, even though they're supposed to be bearish or resistance, I would say, in a trade like this. But this is proving bullish market structure. So once we're opening down here, the idea of the trade is that we've taken plenty of sell side that we need, and once we wait for that market structure shift, that's our indication that we're bullish. So now that we're bullish, I'm not expecting any of these to stop me. So 15-minute, civvies, hourly, it doesn't matter. I'm strictly just focused on high, low, open, close, and that's it. So as promised, I just want to go over what this looks like for the week of the 14th through the 18th. So I just showed two examples within that week, but if I collect all the data from the week, each time this trade showed up, in between the AM session at 9:30 to the PM session at 4 p.m., that's what this data is from. I don't trade London session personally, so I didn't collect data for that. So this is just between 9:30 a.m. to 4 p.m. from the 14th through the 18th on the ES. So by week, or by day of week, sorry, Monday, we had two trades, two times it showed itself. So I took it, 2 wins. Tuesday, 1 win, 1 loss. Wednesday, 2 wins, 1 loss. Thursday, 1 win, 1 loss. and Friday 2 wins. Total for the week is 11 trades taken. Out of those 11, 8 of them were wins, 3 of them were losses. That makes a 72.73% win rate. And with one mini contract on the ES, wins minus losses, that comes out to $5,725 for those 5 trading days. Now, with this data that I'm collecting, it is just strictly can be traded and done on the 1 minute chart. So with this trade model, I carry no bias. You don't need a weekly target. You don't need a daily bias. It doesn't matter what the news is. I'm not paying attention to anything. No higher time frames, nothing. I'm just using strictly the sessions and their liquidity and open and closing prices, along with the true market structure shift that I was talking about for the 1 minute chart. And with those alone, that is how I've collected this data. Now, to further show this data, I went ahead and using the ES did 100, the past 100 times that this trade panned out. So it's roughly 2.5 to maybe 3 months. And that's about how many times you can see that trade happening in that time frame. So the past few months, we've had 100 trades. Out of those 100, we've won 70%. And the average risk to reward has been 3.52 or 3.532. And this is what the profit's been. So that's just the data I have on it. ICT only came out with the one setup for life about a few months ago, and that's when I really started going in and back testing it. And then after doing that for a while, I figured out an entry and then started all over so I can get this data to match the exact rules. This data is the exact rules. Everything is the exact that I went over in this video. So again, no bias needed. You can stay on the 1 minute time frame if you'd like. And if you just follow these rules, you can have a pretty good trading model to use. That's it for this video. If you guys want me to make a video about the NASDAQ and how I would trade that one, just let me know in the comments down below. Just leave a comment. Let me know if you have any questions as well, or any other kind of review requests based off this model or anything like my entries. But yeah, that'll be it for me. If you like this video, just give it a like, and feel free to subscribe to my channel so you just get any notifications when I come out with new content.